Well, good afternoon. This is Ron Gallagher with PAMIC. And on behalf of the Insurance Federation, PAMIC, we welcome you to the weekly call with the Pennsylvania Insurance Department. We're still waiting a minute or two for more attendees to either dial in or connect through their computers. So if you don't hear anything, it's by design. Well, once again, good afternoon, everybody. It's a little bit after 3 o'clock, so we're going to start this week's call with the insurance department. I want to thank them and the senior staff for taking time out of their schedules to be on here so that they can address any of the concerns coming from the industry. I feel that these phone calls have been very helpful. It's been able to disseminate information very quickly and effectively. And I just want to say thank you so much from the department, for the department, or to the department for helping out here. Just a quick housekeeping note. If anybody would like to ask a question during this presentation, all you have to do is click on the Q&A function down below, and you can type your question in. And towards the end of the presentation, the department, since most of these questions are directed to the department, they will start responding to them. Today we have Mike Humphreys, who is the Chief of Staff at the Insurance Department, and he'll be heading the Insurance Department's panel today, and he does have some items that he'd like to go over with. So what I'd like to do now, Mike, is just simply turn the call over to you, and hopefully, we can get this call done in about an hour or so. So Mike, it's all yours.
Sure. Thank you, Ron, and thank you all of you for joining us this afternoon. As Ron mentioned, the commissioner was unable to join this afternoon as she got pulled in another direction. So there are a number of items that we do want to discuss with you today, probably four or five agenda items that we wanted to put on your radar, and then we'll open it up for questions as we have been in the past. We also posted 2 new guidance documents this afternoon that are available on the department's website. So there is a page that we have that actually lists all of the guidance documents in our resource page. So I think that will be helpful for you all to track, or as you would like to kind of save it as a bookmark, so you can go back and easily have access to it as we continue to update documents as conditions evolve. One item that I did want to put on everyone's radar, because I think it was just announced in the last hour. I don't have too many more details at this point, but there was a 6-governor agreement announced earlier on reopening economies. And that's between Pennsylvania, New York, New Jersey, Delaware, Connecticut, and Rhode Island. And each state will appoint 3 people to participate on a council that'll be just meeting and talking about when and how you reopen the economy. So I don't have a date for you that I could share today, but did want to acknowledge that that may be in the news, or you may have already seen it on the news within the last hour. So moving from that, we wanted to just get right into our top of the line agenda. And one of the guidance documents that we issued today relates to financial filings and flexibility in terms of timeliness of those filings. So for that, I'll turn it over to Joe DeMemo.
Had to take it off mute. Sorry about that. Good afternoon. The notice I'm going to talk about is Notice 2020-10. That notice is a bulletin that was led by the NAIC in response to a national bed of consistency for filing for for consistency in filing extensions. There have been discussions about extending, quarterly reports, various filings like the audit reports, the exam reports, that kind of thing. That has been led by the NAIC in developing the 30 and 60-day group of extensions. We will use the lead state concept where appropriate. It's not a blanket extension. You will need to contact your analyst and ask and request an extension. Within the guidance, there are potential 30-day extensions for filings and 60-day extensions for filings. If you have something within that group that you want to request, you have to go through your analyst. Obviously, to the extent you need it, we're going to work with the companies to provide that extension. All filings should be done electronically with a follow-up with wet signatures in a notary if required within 60 days of the governor lifting his order, the stay-at-home order. Another provision within that guidance is that we continue to do exams. We are not doing them at the company offices. We are doing whatever we can at a remote location. To the extent that we need some specific documents from the company, we have been contacting them, and the companies have been very cooperative in providing them. We're going to do everything we can within those exams to do it remotely, and we will follow up with any on-site activities that we have to accomplish, once again, when the governor lifts his orders. So again, the main scope of this notice is that we're trying to coordinate a national response for the extensions of filing requirements. And the listing that is shown in the Pennsylvania is very similar to listings that are shown throughout the country. Now, it is a state-by-state case, but what I've seen so far, a lot of states are joining in. And to the extent they do, we will, again, we'll use the lead state concept to coordinate with other states. So all companies in the group are abiding by the same requirements and the same filing deadlines. And with that, I'm going to turn it back to Mike.
Thanks, Jeff. The next item that we wanted to highlight for you is actually in response to many of the questions that we've received over these calls in the past, as well as a few that we have received in the form of complaints and commentary generally from insurance companies relates to premium finance companies. So that'll be a second guidance document that you will find posted on our website. And for a brief summary of that, I'll turn it over to Chris Monahan.
Thank you, Mike. And as Mike said, we had been receiving complaints over the past few weeks, some on personal accounts, others on commercial accounts, where individuals and businesses that had financed their premiums and had actually given the premium finance companies power of attorney to make decisions and do communications directly to the insurance companies on their behalf, that in instances where there was a default on the loan payment, they had been canceled. Their coverage was basically being canceled because the premium finance company had reached out to the insurance company and asked for cancellation due to non-pay. So the notice that was issued is basically asking for premium finance companies to implement grace periods, have some flexibility, have some understanding that there are going to be default or late payments from businesses and from personal accounts, and to work with them. The notice also, when you have a chance to look at it, if you haven't already, also discusses the insurance companies themselves working with the premium finance companies to assist businesses and consumers who might run into these kind of things, even to the extent of premium finance companies waiving late fees. So basically, it's just a guidance document where we're requesting premium finance companies and insurance companies to work together to assist people who might end up in a situation where for the time they can't pay premiums promptly, And it gives flexibility, hopefully, to assist those types of issues.
Very good. Thanks, Chris. Next, we're going to move into discussion of rate and form filings. And I will turn it over to Shannon to talk about a couple different issues.
Thanks, Mike. So yeah, we do have a few items to talk about. The first one is that you guys may have noticed, or you may have been advised from your filing reviewers, that we sent out a message. And again, just wanted to stop and thank you guys for your engagement and the cooperation through all that's been going on. Back in March 16th, we asked for people to stop and review what they had pending, or if they had something that was coming up that wasn't essential or necessary for their operations, to hold those filings. So just this morning, we actually went ahead and sent out a second message, just letting everybody know that we have been able to transition. We're still working remote and teleworking, but we are able to handle business as usual when it comes to the rates, rules, and forms filings. So if you had a question on whether or not you should or could send something, it's basically open and available now for us to review those filings. Of course, we're still looking to handle the items that come in for COVID-19 as a higher priority, and we'll definitely be looking at getting those items reviewed as quickly as possible, just so you guys are aware that we're aware of priority. The second item to talk about was the accident threshold filings. Again, we talked a little bit about this, I think, last week, where in January there was a bulletin that was sent out every 3 years. We checked the amounts, and we asked everybody to file their threshold amounts if they're under the 1,800 limit. We have sent out emails to those companies that we have not received a filing for. So if you're one of those companies, even if you don't technically file them, if you have a third-party rating organization who does that for you, or someone else who files it on your behalf, we are just still asking that you respond to the email so we know exactly how many are outstanding. They have started to come in, and we do thank you guys for taking a look at that item and making sure that's been submitted. The third thing that I'll talk about is this expedited review of auto filings. We have started to see a lot of companies that are taking some initiative or contemplating doing a payback or a credit program to reflect the reduced exposure to loss during the COVID-19 pandemic. So we believe these paybacks or credit programs do require a filing, and we've submitted the request for you guys to look at the 3 different options and knowing how to file with us. So if you do file this, we are committed to doing an expedited 1 business day review of these items. But basically, we would see them in 3 forms. Either 1, as an endorsement that attaches to all policies and effectuates a payback, or 2, a rate filing that details the amount of premium reduction and effectuates a payback, or 3, a rate filing for premium credit. So again, we're definitely doing our best to get those out to you as quickly as possible. And if you have any questions about those, just please reach out to your filer or your reviewer. The last thing I'll touch on was a question that came up last week from PCRB. We did know that they had put a notice on their website today. So if you go to the PCRB.com, they're basically advising that the Pennsylvania Insurance Department has approved the PCRB filing number 308. These are revisions that establish new coding values for use in recording and tracking losses applicable and or attributable to the COVID-19 disease. So these new code values have been established in collaboration with the workers' compensation insurance organizations, and they're consistent with the countrywide standard. So the effects that they put on there, the changes are effective on April 1st, 2020, for the reporting of claims with accident dates of December 1st, 2019 and subsequent. So please reach out to the PCRB.com to see any more details on that announcement. And that's all I have. Thanks, Mike.
Very good. Thank you, Shannon. And next, I want to turn over to Sandy Aikema to walk through last week's governor executive order related to PPE equipment and surveys that were made available this weekend. So, Sandy?
Thanks, Mike. Yeah, on Wednesday, April 8, the governor issued an order regarding personal protective equipment, PPE, along with other medical resources that are needed. The effort had been a voluntary reshuffling of that resource as needed to get to where people need that PPE the most. That was apparently not working well enough, and so on Wednesday, the governor issued the executive order directing that he will require everybody who manufactures distributes, or supplies PPE, pharmaceuticals, and other medical resources to identify what they have on hand and be prepared to have it commandeered, and that word is in the executive order, commandeered for the use where needed most. The executive order does provide for how it will be paid for, and it includes the compensation price. Over the weekend, on Saturday evening, the Department of Health posted a survey form to collect that data, and it is due, the survey is due by Wednesday evening, Wednesday at midnight of this week, the 16th. If you do not have that survey information, we can get it to you. We did provide it to the health insurers because we are aware that some of them have pharmaceutical operations that might be implicated. But if anyone else has an affiliated entity that might be involved in the manufacture, distribution, or supply of PPE, pharmaceuticals, and other medical resources, you have an obligation under that executive order to provide information about what you have on hand to the Department of Health by midnight on the 16th. And if you have any questions on that, feel free to put them in the chat box or in the Q&A, excuse me, and we'll try to answer them. Thank you.
Very good. Thank you, Sandy. Those are the hot topics that we wanted to share with all of you this afternoon. So I'm going to start going into the questions. I'll note we have 7 pending, so we'll get to the question when I get a chance. But those of you that have been holding off on your questions, if you could put it into the Q&A feature, that would be great. So the first question, and Chris, I'll cue you up for this one. Does the department have any updates on the closure of its producer testing vendor, PSI? Does it expect PSI to be back offering testing for producer applicants on May 1?
Okay, thanks, Mike. So as of right now, PSI has closed the testing up through the April 30th date. You know, we're going to have to wait and see what happens. If things begin to open up, then absolutely, we would love to have that testing center open as soon as possible. We are working on alternatives right now to testing. We have a section of statute that allows us to go on temp licensing. So we're working on a strategy to allow some temporary licensing. We're hoping to roll that out in the next few weeks. And then in addition to that, we are working for hopefully summertime, and I know it doesn't help the situation right now. However, other states are also trying to do the same thing. And the earliest most states can get up and running with this next strategy would be the fall. So if we could get it done by summer, we'll be a little bit ahead of the curve. And that would be on remote electronic testing. And that would be something that if we could get up and running, we may do indefinitely down the road. But for now with PSI, they're closed through the 30th, and we'll just have to see what happens when the 30th comes. Thank you.
Mike, if I can interrupt before you go on to the next question. This is Sandy Eichema again. I had my dates wrong. It is the 16th, which is Thursday for the PPE survey. So you have an extra day. Sorry about that.
Okay, thank you, Sandy. The next question is the California Insurance Commissioner has ordered a premium refund for the months of March and April to all adversely impacted California policyholders of COVID-19. Will Pennsylvania be issuing any similar orders? I think you've seen the orders that we've already issued relative to working with consumers to the extent you can on premium payment flexibility. Certainly encouraging you all to provide grace periods where you can. Certainly encouraging you all to take every step that you can to work with a policyholder before canceling or non-renewing. This time we don't have any particular plans to require refunds for March and April. And we have appreciated, and to Shannon's point, have been turning around very quickly the filings that we've received, particularly on the auto side, addressing premium rates for those of us that no longer drive at all during the day, much less the average miles that we had in the past. Does anyone else on our side want to add to that?
This is Sandy. I'll just comment that our regulatory authority is a little different than California's. So we have taken more of the encouragement route rather than the require route.
Thanks, Sandy. Next question I have is, let's see here. If a premium finance company has been granted power of attorney by a policyholder via a premium finance contract, how should an insurance carrier respond to a request made by the premium finance company to cancel the policy? This places the carrier in an untenable situation where they are being asked by the policyholder to cancel via the POA, but also being instructed by the DOI to provide any accommodations to the policyholder to allow the policy to remain in effect. And I think our notice today generally speaks to these scenarios where not only are we asking the premium finance company to work with you, to work with the customer on any flexible payment arrangements, but to the extent that they will not grant such flexibility to the customer, that the insurance company then work with the policyholder to the extent possible. Perhaps there are other options available through the carrier to continue. John or Jody, did you, or Chris, does anyone want to add to that response?
Yeah, this is John Lasik. We understand the kind of position that you're in. I mean, you have a valid contract and a valid power of attorney. I hope that our guidance to the premium finance companies gives them a little bit of understanding of here's what our expectations are. To the extent, however, that you continue to see this, where you have a power of attorney and the premium finance company is canceling a policy because of non-payment of premium, if you could, let us know about that, either through filing a complaint or just letting us know so that we can look into that. Our hope is that by issuing this guidance, premium finance companies are now on the same page as the insurers and the policyholders, and that we have everyone working together to try to provide the greatest leeway, reasonable leeway to policyholders. And so our hope is that you'll see less of this, but to the extent that you continue to see this, either having a consumer file a complaint, you filing a complaint, or otherwise getting in touch with the department, I think is probably the best way to go.
Thanks, John. What will the department's role be in helping legislators define coverage and contract certainty for commercial business interruption claims? And we also got a question about, will the department be issuing or be required to issue its position on House Bill 2372, business interruption cover for small businesses? We've gotten this question a couple of times over the last several weeks. Continue to point you in the direction of the NAIC statement that was issued at the federal level, but then also here we have not issued a public position as legislation had been introduced, but we are available to answer questions as they may come up if legislation starts to move at all, or certainly can be a resource for legislators that have questions about business interruption issues. That said, we are also in the process of mediating a number of business interruption complaints. Many of them, the policies are pretty clear in that they do not provide coverage. In these cases, though, we are coming back to the company and asking for written responses like we would do on any other customer complaint, and then mediating the process accordingly. Chris or John, did you want to supplement that answer at all?
I would just say, again, we as a regulator, we have expertise in the insurance industry. We have expertise in the way contracts read. We have expertise in the way contracts are applied. To the extent that we can serve as a resource in helping legislatures or representatives or senators understand how business interruption works, what it covers, what it doesn't cover, and to the extent that we see ideas, we're certainly monitoring it. But yeah, we do not have a position on any current legislation at this time.
Okay. The next question we have is an interesting one. Some insureds are canceling their work comp coverage due to a shutdown with plans of rewriting a policy when they're back up and running. How will the insurance department handle this gap in coverage? And I think want to be able to take that back internally. This is the first time I've heard of this being raised in this context or at all over the last couple of weeks. So do want to have a chance to talk internally about what that may mean, unless of course someone else on the team has an initial response to that. So I'm going to move on and maybe you ask that question again next week, or you're welcome to follow up with me directly to provide some additional context to the question. Okay, the next question is that many small life-sustaining businesses like claims adjusters are finding it difficult to acquire PPE. Does the PID have any insight or advice to offer? And I think this question kind of is twofold. The first being in some limited PPE cases, I think the governor's office and the Department of Health has given templates on how to develop and sew or otherwise create your own personal masks that can help in the process. But there may also be efforts, more substantial PPE, that efforts are being made by DOH and PEMA to push that sort of information out through the counties. So I'd recommend probably reaching out through the PEMA website or even at the Department of Health website to find out more information about accessibility of PPE. The last question I have actually, unless I get more, is there an extension for PA premium taxes due on April 15th? If so, please provide that extension date. If not, can the return be filed and signed electronically? And is there a specific email address that they should be directed to? And I guess my response to Anonymous in this case is some departments have a function where they are responsible for the collection and oversight of premium taxes. That was my experience when I was the assistant commissioner in Tennessee. The Pennsylvania department does not collect premium taxes. That's a function through our revenue department. I have not seen anything relative to premium tax payments, but we will certainly look into whether that date has been extended. And I can get that information out to Ron and Sam if indeed it is a date other than April 15th. But as of right now, and as you asked me the question and I'm kind of put on the spot, my assumption is that you move forward with it being April 15th. And on the return being signed electronically, I think that's a question that we need to specifically reach out to revenue for. Is their process. Is John or maybe even Joe, does anyone have any information to add to that?
The only thing that I would add to that is the one of the best sources you're going to find for information concerning the collection and payment of premium taxes is for the extent revenue is going to be the best. Another source, if you are a non-admitted carrier, if you're writing the surplus lines, we encourage you to reach out to the Pennsylvania Surplus Lines Authority. But as of right now, we haven't heard any extension, but yeah, we can bring that up to revenue.
I haven't heard anything either, Mike.
Thanks, guys. Okay, the new last question is, what will be the direction to carriers relating to statutes of limitations, extensions, especially as it pertains to replacement cost coverages, proof of loss submissions, extensions of period of restoration, etc.? John or Chris, do you have any initial feedback for that?
The statute of limitations are set in statute, and they can't simply be waived. This is why we have encouraged that while we understand the times are, difficult to get out there and, adjust some claims and get the claims process going, we have encouraged insurers to the maximum extent possible to continue processing claims and to continue to operate under normal, operate as normal. That's a first question. That's the first time I've heard that question. It is interesting. But a statute of limitations generally under an insurance contract, I believe, is 2 years. And so my hope would be that this wouldn't really encompass that many claims. And to the extent that you do have open claims right now, keep an eye on the time limit up there. But I would have a feeling that would be an issue that is a small in nature, although I can see the issue.
Thanks, John. Next, we got a couple more that have come in since that last question. Is the department aware of any guidance for life insurers on changes to underwriting guidance regarding COVID risk? PID has not issued any guidance relative to life insurance underwriting. I know the Insurance Compact has put out some reference points for life carriers to look at as they make filing changes more generally. Shannon, I don't know if you've seen anything specific to underwriting, but welcome your thoughts.
Yeah, no, Mike, you're going to the right place. Especially for Pennsylvania, most of our life forms and filings go through the compact, and they do actually have a site that kind of gives tips and hints. As far as underwriting goes, the biggest questions that they're getting asked is, can they add, additional specific questions? I think the biggest guidance, they're just reiterating the existing standards that are out there, more around not being able to ask people about self-diagnosis and making sure that whatever they were treated for was under the advice of a medical provider. So I think that's the biggest thing they're finding. Other things are around travel, in regards to if they've traveled or their family members have traveled outside of the country or they're planning to travel. Those existing guidances are still staying in place. I think there's some internal things that are happening within companies thinking about travel, thinking about quarantining or having the ability to withhold a decision for 30 days or to decline at a present time and then come back and decide later. So those are all things that are being considered potentially inside some of those companies. But as far as Pennsylvania, we have no guidance that's going out for life insurance.
Thank you. New last question for the third time, so you're running out of time to submit questions. Does the guidance for COVID-19 apply to assigned risk as well? John, I believe generally we would probably say yes, that it does, require that flexibility or request that flexibility.
Yeah, I believe that any of the guidance that we've issued so far related to COVID-19 would be equally applicable to assigned risks. I would also say it would be equally applicable to the FAIR plan as well. I think we understand that assigned risk is kind of a unique situation for insurers, and I understand that. But given the unique nature of the business, I would say that absolutely the guidance does apply to them as well.
Very good, thank you. Seeing no more questions, I will circle back to one question on premium tax dates. We just found out from Revenue that they have not extended insurance premium tax payments due April 15th. So you should continue to move forward with making those payments this week or on 15. And we'll need to reach out directly to revenue about if you have any questions about kind of the electronic components and what you may be able to do electronically. So with that, I will give it 15 more seconds if anybody wants to ask any other questions. But otherwise, we'll thank everybody again for their time this week. And if there are issues that come up before next week that you'd like us to add to our potential agenda for next Monday's call, you're welcome to send those directly to me. Also, Sam and Ron have obviously aggregated some issues over the time and send those to me. What we try to do in creating our agenda is obviously catch you up on any guidance that we'd issued the prior week, any that we're currently contemplating. And then also if there were any trends that we've seen in terms of questions from the industry or complaints that have come into the department, try to put those on your radar also so we can be as collaborative as we can going into these. So with that, and no questions remaining in the Q&A or in the chat feature, I'll turn it back over to Ron and thank everybody for their time.
Well, thank you, Mike. This is Ron. I want to say thank you to all our attendees for listening in. The recording of this call will be made available on the PAMIC website on the COVID-19 page. You can get it by just simply clicking on pamic.org and clicking on the link there. So if you need to relook at that. Mike, I do want to address one question, and it had to do with the workers' comp and companies asking for either cancellations of their policies.
Yeah.
I believe that that's actually a labor and industry issue from an enforcement standpoint. They're the ones that regulate, to make sure companies do have those kinds of things in place. But if, somebody from the department wants to call over there to see what the guidance is, that it could be helpful. With that, I'd like to just turn it over to Sam Marshall, who's also our co-host today, for any parting words and wisdom.
Yeah,
so Sam.
And I hope I'm not on mute. Can you hear me?
Yes, you're good.
Okay, there we go. One question, Mike, and for you and your team. First, appreciating that in Joe DeMemo's notice, that part of that was to waive all notarization and affidavit, wet signature requirements, not waiving affidavits, waiving wet signature requirements tied to some of those filings. And I know we've been talking about that, so that's greatly appreciated. One of the things that has come up, those of us who are in the surety bonding business are looking, and we're looking at it here and across the country, a directive from governors saying, really to their own agencies and to local municipalities, waive notarization and to require them to accept e-bonding in those instances. I don't know that that's necessarily an insurance department area, but if you could help us sort of find our way through the governor's office in terms of getting a directive on that, that'd be greatly appreciated. It's obviously consistent with everything the governor has said, and I hope there are no state agencies right now that are requiring wet signature when e-bonding is allowed. But any help you can have to dealing with government units, localities, and all that would be great.
Thanks, Sam. And after receiving your question earlier, our attorney team has started to jump into looking at the issue. So I don't think we're ready yet to make any definitive statements on that unless John or Jody want to correct me right now. So
the only thing I would add to that is, these requirements, we get these every so often. The requirements aren't in our statutes. They're often, you might find them in city ordinances, or they might just be a matter of, practice and procedure of the local entities, or if there is a state entity. So it's difficult for us to obviously comment on each and every one of those, but I appreciate the concern.
Yeah, and it's not, and we realize that a lot of it may be in localities, and as much tradition as it is, law. I mean, we have a decent e-signature law that should allow for e-bonding. It's really a matter of how we can get the governor to send out a directive to all state agencies, obviously those he has direct control over, but also he's got a lot of persuasive power, just like when you guys encourage us. If he can send out, if we could get an order from the governor's office encouraging or recommending, if not requiring, localities to accept e-signatures and to waive whatever notarization requirements they have, that would be of great help. So, just if you can point us in the right direction, that would be great help.
Thanks, Sam.
Okay, with that, I just want to say thank you, and we're going to end the call now and just remind everybody that we are planning on doing this again next Monday. So have a great week and be safe.
Thanks.
See you, Ron.
See you all.